Let's hang out.
Yes, sir. Let's see. So I have done a lot of stuff today. I did make my daily YouTube vid, but I also did some short stuff as as you saw, the cringy stuff, sir. Um, but I've been doing some other stuff as well, so I haven't really been following the market much. Like the main takeaway I had today was that Celsius was doing so crazy.
You put up this. You switch playlist.
Hmm.
Okay. Yeah, what do you think about Celsius?
No, it's just crazy. Has it had any news? I haven't checked it out. Head scrolls, prospects, market talk. Trist upgrades Celsius holdings to buy from hold. Adjust price targets to 45 from 35.
245?
Yeah, I said 45.
Oh, 45.
45 is.
Yeah.
I'm just trying to. Why isn't my library? Yeah, I have your songs playing right now.
What
Uh,
is?
no, it's just like your songs playing. Let's see, I go to
My
create.
song is playing where?
Yeah, on my stream. Let's see.
Are you playing one of my songs?
Yeah, yeah, yeah. Not right now anymore though. I have another one I like. Um, but yeah. So if they're upgrading it, you must be happy. You're in Celsius for free, right?
Yeah, I took some shares off. I'll put them back on later. Uh, took some shares off. I'm even more free, I guess.
Yeah,
Yeah,
that's really good.
probably regret it.
Taking shares off.
Yeah,
It
probably will.
has been quite a red day today, but it got a little bit better. I saw the S&P is up. Almost everything is green.
Yeah,
And VIX fell.
yep. S&P's only up 30, 38 basis points.
Yeah.
It was down a lot. It looks impressive. Far.
Yeah, so it didn't break through in any sense.
Hasn't done much.
No.
If you bought it at the low, 2%. Wow.
Yeah, that's good.
Buying it off the floor today was good, but only did AMD move that much. Yeah, today's just a mellow day. Need some of my need something to move. I can take it off. So decay will work in my favor today.
Yeah, the
Option decay.
option. Yeah.
And then how much did VIX drop?
It dropped.
Went up and then came back down. So
Yeah.
not a huge. So the calculation for options is roughly $1 per day per thousand.
Oh, okay.
So if you had $1,000 in premium, you would get dollar per day.
That is decaying.
That's like, Mhm.
All right.
If you had a $10,000 in just premium, you'd get $10 from just okay. And that should be about 25 to 35% per year. I think of it.
Oh wow, IQ kind of held up.
Yeah. It looks like a paving board.
It's getting like really tight in the trading range now.
Think so?
Well, tighter.
Yeah, coiled up like a spring.
The spring to hell or heaven, sir. No, I'm just... What is the price? Price to sales right now is 0.53. That's pretty great. That's pretty crazy, actually.
Yeah. I think so too.
Bottom was at 0.43 or so.
You gotta check out the new game I made.
Yeah. So you posted about it.
Yeah, it's kind of mind-blowing.
Oh, I have a solar flare right now with that on. Let's see. It's too white, sir. I gotta put it to the side. Oh wow. We're getting really into it now, huh? Also, you did one for Tech Corp, Energy, and then Health.
Yeah, whatever it gave me. I didn't even look at those.
Oh yeah.
But,
It doesn't matter.
Hard part was getting the price to move right and the numbers to make sense. It's really nice because the volatility now makes a lot more sense.
In what sense do you mean?
So, the PEG ratio,
Yeah.
the three stocks, ranges between 0.50 and 4. Now it makes sense to trade. But you're gonna, if you play the game for 20 minutes, it's 20 years.
Yeah.
You'll find something interesting happen. There's an important discovery. It has to do with PEG ratio.
Oh Jesus. I bought a really high, low PEG ratio and low PE right now, and it spiked like crazy.
Probably earnings.
Yeah, I kind of
So
doubled
when
my money.
earnings come in. Very volatile.
Yeah. But that was a really like, of course, high growth, low PE, and then of that low PEG. It's cool though to get more sense of what you're doing.
It's blowing my mind. So the epiphany after 20 years, which is 20 minutes, is that only one stock will be the clear winner by a lot. And like, it's almost not even worth messing around with the 10% grower.
Yeah, you
only
need
mess around with the
big one.
20% grower and the 15. Yeah. And kind of insane. So eventually, you just buy the grower and do nothing else. And
The
you can
grower
decide
with
if
the
you
great
wanna-
value.
actually, if you just buy it between 1 and 2 peg ratio, it'll be fine.
If it has growth, yes.
Right. I'm talking about the tech growth. Tech in the demo game.
Yeah,
But it's better move this.
I just did it again. I sell it. Like I saw it dip again, and then I just bought it again because it had huge growth with the low peg value again.
Yeah.
And then it
It's
spiked.
insane.
But the 15% is a little bit not that volatile, and the 10% is
It will
even
be.
less.
It will be.
Yeah.
It will be. Great.
So after realizing that, do you have like changes to your sheet?
My sheet? No.
No.
To my philosophy, like right now, one of the tech stuff that in the demo,
Yeah.
I went to 5 peg ratio, and I sold out all of them. But I'm very eager to get back in. Oh, here we go. Boom.
But when you talk about peg ratio, this is the price to earnings times the growth
Divided by growth.
divided by growth, right?
Yeah, so peg ratio is a way to justify paying up for a company because a PE of 30 sounds like a lot.
Yeah.
But the PE of 31, on the slow grower, if they both have the same PE, one is growing a lot faster, it's a
Yeah.
no-brainer. The PE will lie to you. PE isn't the whole picture. And when back in the day, I thought PE is high. I'm not touching that. But now, unless you live through it, hard to believe. Someone sits you down and says, "Look, this is what happens to earnings over time. This is
Right.
a lifetime of learning, a 20-minute game."
But for example, let me see. You know the Borgor I was talking about, the ones that does chemicals close to here. They do like fake vanilla and that kind of stuff. They have like a peg ratio. Next 12 months, they have a peg ratio of 0.9.
But, you know the growth rate for 5 years?
No, I don't. I see. Yeah, go on.
Sometimes they'll lose money and then recover the next year, and it'll look like they're growing. They're not really growing. They're just getting back what they used to have.
I know that they are the people I know that is working there. They're like building out more capacity now, and they're like in the last area, and then they will probably have a 10 to 15% higher output of goods.
You want to buy it?
Not yet.
Are you just trying to understand it?
I understand it, and it's very expensive. Like they have a dividend, right? 2.4% dividend, and they have a payout of about 50% because, of course, this is a chemical. Like they boil. What do you call it again? Like they boil down trees, right? And then they use all the things from the trees to make a very like a shit ton of products, right? So they, for example, make like the fibers for that you have in your phone screen, for example. That strengthens the glass in the phone, which is quite interesting. And then they make a lot of like fake vanilla and that kind of stuff. So it's like they're very special in that sense. I don't think they will. Nothing will happen to them in that sense. So, and they do have like pretty decent growth. This is FinChat though, so I don't know like who decides these numbers, right? But when it comes to EPS forward 2 years is 20%. And EBITDA forward 2 years is 10%, so it's not the crazy growth, I think. It's not like IQ or anything like that because it's completely different, right? This is like an industry that is pretty cash heavy, I think. You know?
Yeah, you mean capital heavy?
Yeah, capital heavy, yeah.
Cash heavy?
No, yeah,
Yeah,
capital
so-
heavy. It costs a lot of
No.
money to do this.
You know what Buffett says about that?
Don't remember.
That would be a great video to find, right?
Yeah, of course. I do think that he says that it's, you know, not the best business.
I don't know the business, so I don't have
Actually, we
anything
did
to
like I had the video today was on Peter Lynch. Today for the daily video, so it was kind of nice. And I have so much to learn, but he breaks it down really easy in a lot of ways, and it's not like the stupid, you know, stupid. I think it makes you not pay the stupid tax in a lot of senses, you know, in your investing way. Like he just says that no matter how expensive the stock is, like the price of it compared to another company, the price of that company, it doesn't really matter what the price of the stock is in that sense. Like everything can go to zero if it's bad.
Oh yeah, when you're talking about a loser.
Yeah, like it doesn't matter if the stock is $5,000 or it's $3, right? Both of them can go.
Yeah,
You can lose 100%.
10 cents.
Yeah.
Yeah.
Like it's already so low, so how much can I lose? Like it's not a.
Hold it.
But not everybody thinks about it that way, right? They think, oh, this stock is kind of cheap, so it doesn't really, yeah, you know.
Yeah, if they've never lost before.
Yeah. AMD is pushing up a little bit right now. It's nice, but yeah, like I think, for example, we have this company in Norway that is called Norconsult, right? Is a consultation firm. I think I talked about it the other day or something. It has like, it's paying out a dividend. We don't really care too much about the dividend, but the thing is that they are paying out 99% because the only thing they have to pay is, you know, PCs for the place they work. Like it's very low capital cost because it's mainly brains, right, that is working. So it's kind of interesting looking at that company because they have a lot of money. But you can't find it on Seeking Alpha, and this is one of the problems because I like using Seeking Alpha now. So if I look them up on FinChat, they have a PEG of 0.6 and right now a PE of 25, EPS forward growth 2 years to 23%. They have a 3.8% yield. Their cash is about $160 million, and they have a debt of about $1.6 million.
It's the symbol.
It's Norco, Norco. They came on the Norwegian Stock Exchange in like 23 November. So in that
It's
sense,
consulting.
yeah, it's consulting for like building and that kind of stuff. Like a lot
Is
of,
it a fast-growing, scalable business?
I do think so, yes.
I think so.
It doesn't, it's not capital intensive. It's just mainly people with computers, right? So you can
They use
scale the,
software, or is it all humans?
well, they probably have software, but it's mainly their thing is to like help with projects and that kind of stuff, and have projects themselves. But they have been like, I do think that their stock is quite high at the minute.
Oh, add it to the watch list.
Yeah, you don't have 1,000
watch
day
list.
yet on it because it's too, it hasn't gone that far. I don't know what the 200 day is. Let's see. Yeah, 200.
The 1,000-day moving average and the 200-day moving average. It's just a cheat code to quickly get a idea of what the
Yeah.
stock is doing. But if you have the fundamental data, it's gonna be better.
Of course. But I really like when Gerald found out on Opera that it was like 600 employees yesterday. Right? Wasn't that the number he had?
Why?
Like, that's very little people for that kind of company. Like Norconsult right now has like 6,000 employees.
The same size?
No, but like Opera is 100% bigger than Norconsult.
I mean,
In like market cap and that kind of stuff. Like Norconsult is not that big.
how many employees does Norco have?
Norco has like 6,000. But let's see here. Their size right now, yeah, it's around the same size actually as Opera. Like around $1.3 billion market cap. But you also have another company in Norway that is called Multiconsult, that is kind of doing the same stuff. Like when it comes to Norconsult, provides consultancy services with focus on community planning, engineering, design, and architecture in the Nordics and internationally. The company offers consultancy services for the planning and engineering design of construction and real estate projects, such as residential, office, industrial buildings, hospitals. Yeah, maybe it's just like not a capital heavy stuff. And the same is Multiconsult as well. But they are like half the size in market cap and half the size in employees. But they have worse financials. They have more debt than cash. Yeah, we don't have to talk about that anymore. I think I'm at least happy that I got out of the semiconductor in Norway, though. That money has performed better in IQ after I bought that.
Oh, cool.
Yeah, it has been nice, I think. But if oil is gonna chill out, like like closer to summer with OPEC pushing more oil out, it's gonna be interesting how the Norwegian market is gonna react because it's so based on energy.
What do you think will happen?
It's gonna go down if OPEC's gonna flood the market. You know, if they start pumping a lot, it's the price they're gonna push down prices, don't you think?
I would think so.
I just got another buy signal on Evolution, actually. I just pulled up the chart for it. But yeah, with the oil, I think, yeah, like if they start pumping and, you know, we saw the future stuff, the AI future stuff, right? For the oil, it might be correct if OPEC starts to push a lot of oil into the market and, you know, make the price go down in that sense. And then the Norwegian is gonna fall down if the price of oil goes. You can see it when like today, that was like not really a great stock market day. And the companies in Norway, because the oil was doing well, right? Aker BP, you know, you looked at that, and then we have Equinor, which is like the state-owned. They're up like around 2% today. It's not a crazy day, but I think oil moved about 2% today. Nah, yeah, 3%. So if it falls, it's gonna get interesting. And you talked about when we looked at Aker BP, the first thing you said was that it was like a cash cow, right?
So
because it holds a lot of cash. Let's see.
Getting a light sell signal.
For
Krona.
Oh, the Norwegian krona.
Yeah. You say it?
Krone.
Oh no.
Norske krona, eller the
It's
issue.
the most Viking thing. The most Viking thing you can say.
I don't know. It's we have a lot of like really bad cuss words, I think. You know. But I think the big issue, and this is why you can hear so clearly that I'm not that good at English, because when Norwegians talk, at the end of our sentences, we usually end the tone going up. But a lot of the English language moves down at the end of the like words and stuff. So for us, it's kind of weird, and that's why you hear a lot of, especially elderly people, when they talk like in English. It's kind of so obvious where you're from. It's even more crazy. Let's see here. Oh well. Yeah, on Aker they have a cash of 4 billion, but they had debt of 8. But it was producing quite well, wasn't it? I can see that their revenue was 12 billion. Net was 1.83 billion.
It looks good right now.
But the thing is that when you look at like revenue, they say that it should go down, but that's, you know, some of the analysts, I guess. Annual. It's a little bit not that fun that they don't have more. They don't have EPS growth numbers for this. It's 16 analysts that think it's gonna fall, the earnings or revenue, I mean. I think it's the same for Equinor. The analyst says it will be kinda, yeah, dipping a little bit. Actually, I know a guy that is currently working for Aker Solutions. That is kind of another company for under Aker, but it doesn't look too well. Yeah. At least they have more cash than debt.
How are
But-
you judging all these companies? Do you have any way to filter these companies? It's
To
like you're
fil-
just awe and amazed by all these different businesses, but you don't have a clear-cut way to compare them to each other.
To pair them?
To compare them,
Oh, to compare them, yeah.
to judge
Like-
them.
Well, a lot of them is kind of. It's like the different where they are in kind of the different fields, right? When it comes to oil and that
Right,
kind of
but
stuff,
you're investing.
right?
There's a price and there's a theoretical potential exit or yield. Aren't you measuring that?
Yeah, I'm not too good at that yet, so.
Why don't you get better?
Yeah, I'm trying to.
Make your worksheet.
Yeah, that was the thing we talked about yesterday, having the worksheet on it.
Because it's hard to hear you, man. It's hard to listen. That's why I'm like, words. I think there's something wrong with my brain. Like I have to see it.
Yeah,
You're not like that?
it's better to have it on paper, yes.
Yeah, get a worksheet going.
But how do you
Like I know
put everything in it? But what kind of worksheet are you using?
just you don't have any, so start. Like
Like a Google worksheet?
my brain was just shut down. Yeah, go list your 10 stocks that you like and compare them to each other. Make a worksheet. Like I know when in doubt, just go pick something off my worksheet. Today, Lyft is on my radar because it's not in China. It has a super cheap PE, 9% yield, and it must be growing fast.
So it-
$11 now.
It popped
gonna
up
be
on your
$100
worksheet
potentially.
today?
No, it's on my worksheet. I don't know why I don't pay more attention to. I added some just now.
Hmm.
It's looking strong, but it's super cheap.
What was the ticker for it?
LYFT.
LYFT? Well,
Yeah.
Lyft, you mean?
Lyft.
Oh, yeah.
$11 stock. 11.93. Is it a bottom? I have no idea. Is it gonna go up? Maybe. But the
What's the
Yes.
numbers on Seeking Alpha?
so 13% growth this year, kind of slow, but then 31.20.
Oh, well.
So growth is there, and the PE is 10. So
Hmm.
it shouldn't be a 10 PE stock. So even in 2 years, this could be a 5x. I don't know why it's not shouting at me.
When you look at the PE compared to the EPS growth, is that kind of the correlation you're doing there to like the percentage?
Oh, this is what I was telling you the game is about.
Yeah.
So there's 3 states to any stock: fair valued, then overvalued, and undervalued. Assuming all stocks are fairly valued, when you find out the growth rate, you're going to earn the growth rate. Assuming the stock is priced perfectly, if the growth is 20 to 30%, well, then every year you're going to make 20 to 30%. However, sometimes the stock gets a little cheap, sometimes it gets a little expensive.
Mm.
That's where another opportunity shows up. This one right now, I don't know why it's at 10 PE. Doesn't seem like it should be there. Maybe
Yeah,
it should be a 20 PE stock.
it
So here you get
says
paid
yeah.
twice.
Mm,
You get paid on the revaluation and any growth while you wait. That makes sense?
yeah. Do
That's a big deal to me.
you? I see the valuation on it says it's 12 months trailing is 207 p.
Maybe they were low,
Hmm.
negative. Where are you getting your data?
I'm looking at Seeking now.
I look forward. Trailing doesn't say. Maybe the yeah, that's the gap though. It's the
Hmm.
gap. Generally accepted accounting principles.
Oh, okay.
That's more strict than the non-gap.
Oh, okay.
Well, let me draw this. If we have earnings growth,
I gotta pull up your stream as well.
yes, growth. Say yes, earning growth makes company more valuable. That's earnings growth. Say in a different color, value will be some number.
Hmm.
That'll be our value is
So the thing is that like when you look at it, you mainly look at the EPS for the growth, and then of course that it's increasing revenue, but that's not that important. The most important part is that it's growing its EPS.
no, it's not the most important. You need to have a sense of what the business should be worth, intrinsic value.
Yeah.
Not easy. Then now I'm going to do another one, which is the stock price. And the stock price will go sometimes in line with fair, over fair, down below, above. Or I might say premium, high PE.
Hmm.
Yes. Then down here, might realize, hey, this shouldn't be down here. This is where I think Lyft is right now. Undervalued. Low peg ratio. Growth not priced in. And up here, overvalued again, overvalued, IPE, IPS, high peg. So this is a good example to mention Palantir. Let me put my music back on. I like playing it. Still. So the idea is we need to have some sense of what the business is worth. This stuff happens over and over again. Palantir was overvalued when it came out at $40 and 140 times sales, whatever. Then it crashed to more normal, not exactly undervalued, but more normal. Then it went up to where it is now of fair value. This is what Warren Buffett and Peter Lynch are talking about. They don't outright say it in a way that we understand. Lynch's book, and it's in Intelligent Investor. It's only mentioned once in the Intelligent Investor. The secret formula. I have it memorized, and I'm not telling you. I'm just kidding. I'll pull up the link later. So this is what happened to Palantir.
Yeah.
Go to Palantir. And secret to infinite wealth. Don't tell anyone. I'm just sharing the secret of infinite wealth with you in this private chat.
Yeah, we're alone, right?
Yeah, you won't tell anyone.
No, never.
So here's price to sales. And expensive, sell your shares. Cheap, buy your shares. And when I say sell your shares, that means like, oh, half. And then now it's another time to sell half.
Yeah.
Go buy something else or buy it back in. It's cheaper. And you're compounding your cash.
Yeah, that I understand.
Well, the tricky part is understanding the calculated intrinsic value.
Yeah. So you're not buying a company that is, oh, it's way down, but it will keep on going down. You had a bad, didn't you have like a, I think one of the first times we talked about a company that was really bad, diluting their shares and that kind of stuff?
Yeah, we're ignoring that. Here's the formula. Don't tell anyone, please. This is a secret. This is the only value I bring is this formula. So on Wikipedia, it's a game changer. Look up Benjamin Graham growth formula. And there's two versions of it. One that factors interest rates, but the one that doesn't is good enough. There's a base value and then some growth component.
Yeah.
And I wouldn't use it like a strict formula. It's just that if you own a business and you know it's growing, you can visualize the growth in the future, or you can try to calculate what it's roughly worth.
So
you don't want to pay this, you want to pay less.
So is this the formula you use for your worksheet?
No. I just use the growth rate. Mine is actually more conservative. This is actually aggressive. This would make me pay more. It's kind of insane to say that my growth formula is more conservative than Benjamin Graham, who's like a cheapskate.
So
but I just use two-peg ratio, or two times the growth rate. So if we go look at Lyft,
yeah,
we're gonna smooth out this growth rate. Let's say there's not as many analysts later out, but I'm gonna use 20 just to be optimistic. So the financial value. Oh, so there's another formula that you probably want to. Oh no, I won't get into it. If the company is small enough, the growth rate This way for me to calculate, I just take the growth rate, which is 20, and I multiply it by a future value, and that way I can visualize the future price. So 236 times 40 is what? Um, 80? 120? Let me get a calculator. So 40 PE, which is twice the growth rate, times 2.36, 94 bucks. And this is 4 years out.
Mm.
So in 4 years, if the current PE in that year, we'll call that the present, the future, if the $2.36, you should be willing to pay 40 PE for a company that has steady growth for many, 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 many years at 20%. Then we'll say, yeah, sure, I'll pay $94 in 2029.
Mm.
But right now, the stock is trading at 11.
But derive that of you have the EPS there of like 236 in 2029, right?
Yeah.
And then you factor in 20% growth a year.
Yeah, you have to use some growth number. You're not going to use the highest number and say it's always going to grow at 31%.
No, of
You're not going
course.
to use the lowest one and say it's only going to grow this low number. You have to smooth it out. So it's not perfect. It's like an art, not a hard science. And then if we go into recession, it's worse.
Right.
Okay, lower interest rates, it's better. Like there's no point being perfect.
It's just to find a way of saying it's undervalued.
Yeah. So you can easily see that this could be worth $94 in the future. You discount that backwards, you'll get some number. My worksheet actually discounts that. So the intrinsic value of that future price on Lyft, discounted back, but also valuing the earnings, is this is worth 75 bucks to me. Lyft to me is worth 75 bucks.
Jesus.
So this is like a modified DCF. It's not really DCF. It's more aggressive than DCF because DCF doesn't factor what it could be worth in 5 years. Mine discounts, and then I use 2PEG, which is a like a 40 PE in 4 or 5 years. It's pretty good because if you look at Palantir, the intrinsic value is 70 bucks in 5 years. The fact that it's Palantir is 84 means you're getting more business than you should.
Yeah.
You should take profits and either get back in later and leave that money in cash, like getting an interest rate, or find another opportunity. I'm really happy with my worksheet.
Yeah,
Just,
that's understandable. But are you like when you have the percentage of the day, right, for the price and everything? Are you like scraping that from somewhere with like a?
No, this is a Google worksheet. It auto updates. This is a living worksheet.
Oh, really?
Yeah. So it calculates the current price.
It just doesn't give you earnings and that kind of stuff.
Yeah, because it's not on Google Finance. And then I filter it. Right now I have whatever it has. And even then, IQ is theoretically 2 times better than Lyft. But it's risky because it's in China. What was I hearing today? There was some article in China.
Oh.
I don't know if it's real news or not.
What was the news?
like the trade war between U.S. and China, or something else.
So your worksheet says that IQ should be $26.
Let's see. So IQ has a huge earnings yield.
Right.
If you owned all of IQ, it's 11% earnings yield. It's like owning a rental property that makes 11%, and it's growing. Next year, the earnings yield is 14%.
Yeah.
If I can make 14%, that's amazing. If I can make 14% in an investment year after year after year, I'd be happy.
Yeah, of course.
You're telling me it's growing? Yeah, so the financial value for the future cash flows and the future exit discounted by 10%. IQ is worth $26 to me. But yeah, does make sense, right?
I gotta put a worksheet together like that. I just had to find out how it works.
It's a game changer.
Yeah.
Because this is like the 10th worksheet version that I've made.
Oh, really?
Yeah. There's so many worksheets that I tried, really ugly ones. But not that hard. Like, let's say new spreadsheet, make it bigger. Other people are watching. You're gonna do your stock. Who's that? Stock price. Who joined? Oh, hey, Jay. Welcome.
Oh, we're getting. Hey.
It was Gerald.
No, it's Jay.
So we have stock price. We have ICE. Let's do Apple, Nvidia. We'll do IQ, AMD, Lyft. Just bear with me. And then we'll do equals Google Finance. Ticker. It wants a ticker. We'll do that. And then I think it wants price. I hit enter. Didn't work. All right, that worked. So this is a Google worksheet. Drop it down. Now I have my prices. And I have the beginning of my worksheet. Does that make sense?
And then you have... No.
Oh.
I put in, like for Apple, I just... Oh. No, what? Don't they have to put colons on the end? No?
No. Hey. Oh, don't be scared of failure.
Yeah, I'm trying.
Reset. Right, so then I have my earnings. So I have Lyft as an example. I'm not going to do the whole worksheet, but I have those earnings there. And I'm going to put them in. So yeah, I have my earnings. Now I need to figure out what it's worth. So let's say I don't have this 2030 cell. So I'll have to grow that one manually. So I'll just multiply it by 1.20 in this case. And either I assign a growth rate or you can find one. Let's just say that's the growth rate. I'll just put manual. 2030 2 peg value. And I just take equals this times 2 times the 2030 2030 EPS. And now I have a future price. That's the simplest way to do it. Price. Obviously, I have a bunch of other formulas. I should probably clean mine up, but I like it. So it's trading $11 now. Future price potentially 113
At the 40 peg.
for lift.
No, not a 40
PE.
P. Yeah.
Yeah, that would be a 2 peg. So then you can either compare percentage wise how much you make. Obviously, that's a 10 bagger. Or you can discount the earnings one by one and add it, and also discount the future price by 5 years. There's a formula for that. And fill in the rest.
Yeah, I'm still stuck on getting the price, so you know.
It's
I'll find it out.
here, look. You're just gonna do one cell and price in quotations as the attribute. So I'm gonna zoom in. I'm gonna select lift, and you can see it on the stream.
All right.
Should see it now.
I think I. Well, give me a sec. Oh, up there. All right. I'm stupid.
You're new here.
Hey.
Much is forgiven.
But when you have, well, it says Google Finance, and then you have okay. Okay, so you do it like that. All right. Then you have.
I'm just trying to make you wealthy here. Infinite
Yeah,
wealth.
I appreciate it, sir.
Just grind through it.
No, I didn't. Oh, okay. Because it. Is it
I
because I
remember
have
when
a cap on it?
I got out of college, and
Yeah.
I got an offer to be a stockbroker. Like, this is the stuff I was hoping they would teach me. Like, the secrets of the money universe.
Right.
Nope, they didn't.
For some reason, I have an error doing it. If
Are
I
you
put
you're pressing?
I do a space and then I have B7 though because I'm not at the same cell, right? But then I have price in quotation marks
Why do you have a space?
because it won't light up if I don't have the space for some reason.
I don't think there's a space.
Let me try it once more. Yeah, I don't think it's a space. I get an error.
Parentheses.
I have a parenthesis on it.
Let's see, equals
Is it like this? No.
Google Finance. Select it. And it automatically pulls up the formula. Maybe you're not grabbing the formula. Then ticker. Just do a new ticker. We'll do ERK. Actually, I won't do that. I know that one's a trick. ERK. Do Uber. See what's going on. Market's closed now.
It's ended positive, eh? Oh. I see it grabbing the Google Finance, grabbing the lift, and then I have the price. It shouldn't be different.
Crypto bullish?
Looks like BTC is positive.
Ethereum maybe? Remember when Eric Trump was saying Bitcoin is a good buy?
Yeah.
Was that 2,800 or something? Never trusting that guy again.
2,800.
Yeah, I think that was around there. Let me play the pump song. I don't know. I think they pull Celsius back.
You think?
I'm not mad. I won't be mad if they drop it. I'm not mad. I'll get back in it. It fell off my worksheet because it fell off the 36 PE, 25 growth. Yeah. $36 PE when there's 20 PE stocks with the same growth, like AMD. See what I got to deal with?
I'm about to choke somebody out.
Because you're bad at. Oh.
Yeah, I'm bad at Google Sheets, sir. I don't understand why it doesn't work.
Okay, there's no rush. Should be willing to do them by hand if necessary. I actually made a worksheet to do this by hand.
Yeah.
Yeah, it's actually kind of fun. It helped me understand how growth stocks are priced. It's super important. The major problem I had with holding good stocks is not understanding this formula, the growth formula. And in order to get those 100 bagger stocks, you need to understand this formula. Like, where's my Russian stock? That formula is how I got into Ozon and why I think, don't quote me. I'm going to make either $500,000 or $1 million off this company. As long as we don't have World War.
How much is it?
I'm willing to bet.
Hey, I got it. I got a prize. I'm best.
You got it working?
I'm number 1.
Number 1 what?
Nah, I put in Nasdaq and then colon lift. It worked. Pulled up the price. Is it correct though? This is the question. Ooh, 1187. That is correct. Yes.
Where's Amazon? Amazon the best example? Buying Amazon at 1 peg, 1 PEG. In 2000, I don't even know what the valuation was. You bought Amazon every time it was below the 1,000-day moving average and held it. You did well.
100%.
And every time a growth stock goes below that line, it's usually peg 1. And when the stock doubles from there, often peg 2. Paying peg 2 is okay. Paying peg 1 is a lot better.
For a growth company, yeah.
You show Apple. Yeah. Same thing with Apple. Every time it was at the line or below, every time Apple was at the 1,000-day moving average, aka the 200-week moving average, it was worth buying. because you earn the growth rate. If you pay twice as much, half the growth rate. Math. So Lyft is below that moving average. I think it's trading at even below 1 PEG ratio. If it's growing at 20% and the PE is 10, that's a 0.5 PEG ratio. What a deal. Growing at 20% should do 8x in 8 years. 100% in 8 years. That's what Apple did. That's a good example. So Apple did 8x. Let's see. 2008. So where's 2016? It's the high. 2016, less than 8 years, did 10x. Then another 8 years, 5x. This time it was slower, 7x, but slower. Either way, roughly 8x in 8 years, then 8x again from it there is 64 times your money in 16 years because of compounding. So that's the other lesson. 8x in 8 years, we're happy. You do it again, it's 64 times, not 16.
Yeah.
And you only have to do it once and do it big. You're good.
This is why you're not, you can't, have too many small allocations.
Yeah, Charlie Munger.
Yeah.
Charlie Munger says, if it's worth doing, do it big. What's the actual quote? Remember?
Don't be a pussy.
Don't be a pussy. Okay, so I had the chart in a log. It's way more impressive. I take the log off. So let's pretend Lyft. How big is Lyft? Let's say Lyft is going to grow at 20%.
Yeah.
It's 4 billion. If it did 16 years of growth, might do 60x. It's only 300 billion. That's all. Not
in 16 years.
How? 11, 12 times 64. 768.
It was also some crazy prices earlier, right? At like $60, $70.
340. So by 2040. Just do high to high. Good lift. Be worth 780 to 2040.
780. Is that the 64 times price?
It's 64 times by 12, yeah. Then what's 8x? 8 times 12. 86. Oh, that's pretty close to so, 2033. 2033. I think it'll beat this, but what do we say now?
But Lyft is mainly just like Uber, right?
Yeah.
But what do you think about like this kind of autonomous vehicles and that kind of stuff?
Oh, I don't know. I haven't really factored that in. What do you think?
I think it, well, probably Lyft will have many years before that, you know? Well, you have like the self-driving Teslas. Not here though, much. But I don't know.
Maybe that's why they're crushing Lyft so much. They're pricing in that we won't need Lyft pretty soon.
Might be.
Go see what the articles say. Here's a cool article. Eat value in rideshare with gap profitability.
Yeah, I don't have it. But you have it though.
So what, the article?
Yeah, I can't read it because I'm cheap at the minute.
You'll end up getting it. Well, are you going to be investing in American stocks generally?
It's a little bit hard not doing it at the minute.
Mhm.
Like, you guys have a lot of great picks, I think, and it's, I like it. But I would like to try to find some stuff in Norway as well. Of course.
Man, I got to save this explanation.
Are you gonna grok it? Grok it, I mean?
No.
But that might be the thing crushing it.
I'm going to add it to Twitter.
But it's probably, like, multiple years out though. So maybe it doesn't.
Cool. Like that. Fair value, earnings growth, premium discount. Anybody will appreciate it though. It's okay. Put that in the the other article in general. Game. I left it playing in the back. The fundamental investing game.
Yeah.
And I don't. There's something that some error that happens when you stop looking at it and then you go back. But it says it's only been 12, 13 years, 13 minutes, but that's not right. Anyways, growth stock is now what, $5 million a share? No, I don't even know. It could be billions. It's huge compared to the other stocks.
Hmm.
Yeah. In reality, no stock can grow at that rate ever.
Yeah.
So buying the highest growth stock, not touching it, is the best strategy, even if it goes down in PEG ratio temporarily. Insane. Let me refresh it. It's probably crappy. But what a better lesson. Trading growth stocks when they're low PEG ratio.
Let's see.
How's your worksheet?
I'm gonna keep on working on it. I just wanted to try something.
Is it working or not working?
I got the prices to
Want
update
me to
on.
just send you the code? Oh, good, good, good.
Yeah, I just do like Nasdaq and then the price, like the stock amount. And it gives the price. I don't do like the stock.
Is that an international thing? Think it's an international thing?
I don't know. Might be.
Would be good to know. So, if you
Well, the other way didn't work.
Yeah, it might be international. Sorry, it was not a lot of help.
Nah, you were good help, sir.
But let's see. Let me zoom in. Can I zoom in? Yeah. Okay. Cool. All right. I'm trading my game because its market's closed, and I'm only gonna sell a little bit of this growth stock, Tech Corp, and the PEG ratio is over 3. Almost not even worth bothering with the other stocks. And let's see, I started with 10K make believe money.
Oh wow.
Put it all into this grower. Growth stock grows at 20%. PEG ratio is cheap. I'm down 45%. Just like in real life.
So you bought it at a high peg?
Damn, I'm down a lot in this horrible investment. Boom, but then the earnings come out. Now I'm up. Good job, Tech Corp. Can't sell it now. It's 2.6 PEG ratio. I need to see 3 or higher. Oh, all right. PEG ratio is coming down. Got most of my money back. Still some there. All right. I got about 10K cash. I started with 10K. I still have 10K, and I still have the rest in stock. Now I'm waiting for an opportunity to get back in. 1.6, I'll buy some there. 1.6, 1.5. All right, I'm going to leave 5,000. Because of portfolio management. Going back up. Ooh, 3 peg. I'll sell some there. 4. Get all my cash back. And that's it. That's the whole game. Buy some of the 15 grower.
You remember when I was rambling a lot earlier before you brought me down?
Yeah.
With the
Yeah,
Norco
why?
thing has this is
Yeah.
on FinChat though, but it has a peg of 0.6.
0.6. Okay, but what's the growth rate?
On EPS 23%. It says here though, but I don't know. I
5
don't
years?
think you can. 2 years.
Do you think it'll grow 23%?
I think it has a chance of doing it, yeah.
That would be the catch. If you believe that, then that's a good deal. I make 20% and it's cheap right now.
Hmm. Should have another screener as well. I gotta work on my sheet. I'm getting so freaking blinded of that.
Is that fine?
Huh?
Oh, you're talking about the white?
Yeah, I'm starting to get a little bit tired, but I have night shift tomorrow, so it's a great thing. I'm on night week, so it's delicious.
All right, I'm gonna call the stream, I think.
Yeah.
Gotta work on an option spread video to do